Welcome to our YouTube channel, The Financial Freedom. De-dollarization is a trend that is gaining momentum around the world. In this video, we'll explore what de-dollarization is, what's driving it, and what the implications are for the global economy. One asset that is already responding to the de-dollarization trend is gold. As countries seek to reduce their exposure to the US dollar, gold is being recognized as a valuable alternative. This trend is likely to be particularly pronounced in countries that are not major holders of gold but are seeking to diversify their reserves away from the US dollar. So, what's driving de-dollarization? One of the main factors is the perception that the US dollar is losing its status as the world's reserve currency. As the world becomes more multipolar, countries are looking for alternative currencies to hedge against geopolitical risks and reduce their reliance on the US economy. India is one country that is actively exploring alternative currencies. India has taken several steps to position the Indian rupee as a global currency, including allowing Indian companies to issue bonds in foreign currencies and launching the International Financial Services Centre, IFSC, in Gujarat. The IFSC offers tax incentives and a competitive regulatory framework to attract foreign investors. Moreover, India has been actively promoting the use of the rupee in trade with neighboring countries, including Bangladesh, Sri Lanka, and Nepal. The South Asian Association for Regional Cooperation, SAARC, countries have also agreed to allow the use of their own currencies in regional trade, which will further boost the use of the rupee. While gold is currently the first asset to react to the de-dollarization trend, it is likely that other assets will also benefit from this shift. For example, cryptocurrencies, such as Bitcoin, have already gained popularity as an alternative to traditional currencies. Russia and China have been at the forefront of the de-dollarization movement, actively seeking to reduce their exposure to the US dollar. Other countries have since joined the movement, with the European Union considering alternatives to the US dollar in its energy trade with Iran and Venezuela. However, the de-dollarization trend also poses challenges for countries seeking to reduce their dependence on the US dollar. One of the main challenges is finding suitable alternatives that are widely accepted and have deep and liquid markets. In addition, countries may face obstacles in implementing policies to reduce their exposure to the US dollar, particularly if they have significant trade or financial ties with the US. The de-dollarization trend has implications for the global economy and financial markets. As countries shift away from the US dollar, the demand for alternative currencies and assets is expected to increase. This shift can also have implications for the U.S. economy, as the U.S. dollar's status as the world's reserve currency has provided significant benefits to the U.S. in terms of lower borrowing costs and higher demand for U.S. assets. It's important to note that de-dollarization is not a new trend. Countries have been exploring alternative currencies and assets for decades. However, the trend has gained momentum in recent years as the world becomes more multipolar and as geopolitical risks increase. The de-dollarization trend has implications for not only the global economy and financial markets but also for international relations. Countries that are successful in diversifying their reserves away from the US dollar may gain increased economic and political power, while the US may see its influence wane. One country that could benefit from the de-dollarization trend is Russia. Russia has been actively reducing its exposure to the US dollar in recent years and has been increasing its gold reserves as a result. Russia is now one of the largest holders of gold in the world, and this has helped to insulate the country from fluctuations in the value of the US dollar. China is another country that has been actively exploring alternative currencies. China is the largest holder of US debt in the world and has been looking for ways to reduce its exposure to the US dollar. One way that China has been doing this is by increasing its holdings of gold. China is now the second largest holder of gold in the world, and this has helped to diversify its reserves away from the US dollar. Cryptocurrencies are another asset that could benefit from the de-dollarization trend. Bitcoin, in particular, has gained popularity as an alternative to traditional currencies. Bitcoin is decentralized and is not tied to any government or central bank, making it an attractive option for those seeking to diversify their assets away from traditional currencies. However, there are also risks associated with de-dollarization. For example, if too many countries reduce their exposure to the US dollar at the same time, this could lead to a sudden drop in the value of the US dollar. This, in turn, could cause significant disruptions in global financial markets. The de-dollarization trend could also have implications for global trade. If more countries begin to use alternative currencies, this could make trade more complicated and increase transaction costs. It could also lead to more volatile exchange rates, which could make it more difficult for businesses to plan and invest. In summary, de-dollarization is a trend that is gaining momentum around the world. While gold is currently the first asset to respond to this trend, it's likely that other assets, such as cryptocurrencies, will also benefit. De-dollarization has implications for the global economy, financial markets, and international relations, and it could lead to significant shifts in economic and political power. However, there are also risks associated with de-dollarization, and it's important for countries to carefully consider the potential impacts before making any significant changes to their reserve holdings. If you're interested in learning more about de-dollarization, we've included some additional resources in the description below. Be sure to like and subscribe for more videos on the latest trends in finance and economics. Thank you for watching. Thank you for being a part of the financial freedom community, and we look forward to bringing you more insightful content in the future. Stay tuned.